Oil back above $85 a barrel, the highest level since October, ahead of today's OPEC Plus meeting, where they're largely expected to reiterate current supply cuts. Our next guest anticipates interest rate cuts would bring an additional upward push in prices this year. So to discuss, we have Claudio Galimberti, Rystad Energy SVP, joining us. And thank you so much for being here, Claudio. I'm curious, just what is your top line projection for where we could see the price of oil going this year?
Thank you very much for inviting me back. Well, it's always hard to tell where the oil prices will end up being, but clearly they've been on an upward trend, an upward trajectory, which we forecasted at the beginning of the year. And this is primarily due to the OPEC cuts, which were renewed today and through the end of Q2. So I would say that until the OPEC cuts are in place, we are on an upward trajectory. Of course, there are some factors to the downside that we need to take into account, but they kind of are dwindling down, right? So we were probably a few months ago, we were concerned about demand. We are no longer concerned. There are a lot of geopolitical reasons to be concerned about supply risks. Therefore, I would say, triple-digit oil prices are not that far at this point. And this is where we could end up in the next couple of months, for sure.
I was going to say, Claudio, how soon could we see those triple-digit prices?
Well, this depends on a few things, right? So right now, we are on a very tight market. The OPEC cuts have created a huge deficit. Demand remains strong. What could bring the prices up is a big outage. We have seen Ukraine just as of yesterday attacking a big refining in Tatarstan, which is something like 1,000 kilometers from the Russian border. So there is an escalation in the war between Ukraine and Russia, specifically targeting Russian oil facility. Russia is a major oil producer. So the moment you have potentially 500,000, a million barrels a day temporarily impacted, this is when you can see oil prices notch up potentially another $5, $10, and then you are in triple digit. But there is one very important element that we need to take into consideration, which we highlighted for the past few months, which in my view will keep let's say a cap on the upper movement of prices. And that is basically the big spare capacity we currently have in the Middle East.
Well, I'm curious then about what that could look like moving forward, because there are several geopolitical events going on right now that could impact the price of oil. Which of the ones that you just mentioned do you think are going to stand to have that highest impact throughout the course of the rest of the year? Is it what's going on in Ukraine? Is it the Saudis? Which one?
Well, it's both. It's both, Madison. We need to take into consideration that the war in Ukraine has been going on for 2 years, and right now we are at a phase where the oil facility, refining, midstream has been targeted specifically through drone attacks. The first one occurred back in January, and right now we are in that phase of the war. On the other hand, in the Middle East, the situation appears to be getting worse and worse, unfortunately, by the day. So it is over the weekend when an embassy in Syria was attacked, and the embassy of Iran, and that is likely to bring further escalation in a region that's always been extremely unstable, but right now, even more so after, of course, the October 7th attack on Israel by Hamas. So you have potentially, at this point, Iran can be on two fronts. One, if there is an attack by Israel into the Hezbollah, which is Lebanon, and the other one, of course, is the Houthi down in the Red Sea, which have engaged the U.S. for the past 3-4 months. The Houthi are supported by Iran. So the situation is extremely complicated in the Middle East, increasingly difficult to manage between Russia and Ukraine. Therefore, the oil supply can be impacted at any point in time in the next few months. Of course, this is not the most important thing. During the war, you have casualty, you have fatalities. This is what what really matters. But when it comes to the oil markets, we are in a phase where oil supply can be severely impacted. And if you consider that last year we had outside of the Middle East, outside of Russia, we had the United States production was growing really strong. And that was, of course, a good thing. This year, we are not seeing the same level of supply growth. And that's another bullish factor for prices, if you think about it.
So if we don't have the same level of supply growth, and then also coupled with rising demand, if the Fed were to cut rates here in the U.S. later this year, how big of a factor will that be in terms of a catalyst higher for prices?
That's also another, this will be a non-fundamental factor on oil prices because it's outside the supply and demand of oil, but it is a fact that if you decrease interest rates, then a boost for the economy. So indirectly, it is a boost for oil demand, and it also has a boost in terms of a general risk-on attitude, and oil is a risky asset. Therefore, you decrease interest rate, you increase the risk-on attitude of investors. You end up with everything else equal with higher oil prices. Therefore, we could be in a situation in which oil prices are stably above $90 per barrel, and this is pretty much what at Rystad Energy we are expecting, although we have a little bit more nuanced view than that with higher prices in certain periods of the summer and lower later on. But overall, we are in definitely a bullish scenario right now due to all these elements that are almost all of them are pointing upwards. Of course, we cannot discount the fact that oil demand can at some point start to disappoint. So it was a big surprise last year when oil demand was so strong. We begin to see some sign. The latest sign, we have real-time information about traffic, shows that oil demand is actually weakening a little bit. It's very early to tell whether it is a trend or just a blip. But if demand starts to wane down, to become weaker, then of course oil prices will react with a downward adjustment. But apart from that, I can only see from this point onwards for the next few weeks upward pressure on prices.
Claudio Galimberti, always great to get your insight here. Rystad Energy, a senior vice president. Thanks so much for joining us.